Hey, this is Phil, and it's your Friday video update. Well, everyone knows on Wednesday the Fed raised the federal funds rate by 0.25%. Now, this is short-term interest rates and doesn't correlate directly to mortgage interest rates. However, many customers feel like, oh, all of a sudden my rates went up 0.25%. That's not the case. What drives mortgage interest rates really is the bond market. Now, the bond market doesn't like inflation. And when the Fed raises the federal funds rate, the reason they're doing that is to fight inflation. So actually, a raising of the federal funds rate usually helps interest rates in the short term. And I'm going to put a chart up here on the screen and show you that in December 2015, when the Fed raised the federal funds rate, sure enough, the 10-year Treasury dropped for the next nearly 2 months, which helped interest rates. Now, we haven't seen that drop begin just yet. Usually right after the Fed move, there's a period of sort of uncertainty, but we're still expecting to see that happen. Now, there's no guarantee, but should history hold its course, I'm still predicting a move down in the Treasury and therefore an improvement in bonds. And similarly, as everyone knows, the stock market has been doing just amazingly well ever since the election. There's been a lot of exuberance in the stock market with regard to a more business-friendly administration coming in next year. But honestly, that's probably going to have to stop at some point as well. There'll be some profit-taking in the stock market, and when money comes out of the stock market, it's generally parked in the bond market, which helps bonds and therefore helps interest rates. So we're still looking for some improvement in rates. Yes, rates have gotten worse, and they've even ticked a little worse since the Fed move. But hoping for that to kind of ride itself out here over the next maybe 3-4 days. And hopefully we're going to see that 10-year Treasury start to drop. And if we do see that, we're in for some slight improvement in rates. I don't think rates are going to get back down to the levels we were a month or two ago, but certainly maybe pick back up some of what we've lost here in the near term. I hope that helps. Please forward and share this with anyone you think might find it useful. And if you have more specific questions or would like to talk to me about anything, please feel free to give me a call or shoot me an email and be happy to set up a one-on-one with you. If I don't talk to you next week, have a very Merry Christmas and a Happy New Year. Take care now.